This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. Robert Kiyosaki, the Rich Dad Radio Show. The good news and bad news about money. And today, as you know, bad news can be good news, especially if you're ahead of the bad news. So we're going to talk about one of my favorite subjects, which is gold, but also it's about how it relates to Bitcoin, about what's happening in the gold industry. Because that, for those who know my story, that was one of the happiest times of my life. I flew behind enemy lines in Vietnam back in 1972 because Nixon took the dollar off the gold standard in August 15th, 1971. So it's about 50 years ago. And ever since then, the BS, the bullshit, has been piling up. Because how can you have so much fake money going all over the world? So when people say, why do you buy gold? This is very simply because I don't trust my government. You know, if you trust your government, take the dollar. So anyway, that's it. So we have our very special guest. His name is David Garofalo, and he's living in Vancouver. And we're just laughing about that because I love Vancouver. Every con man, crook, and everything lives there. They're pitching deals. And every time I was in Vancouver, I would sit there. It was like, what's the definition of a liar? It's a gold miner standing next to a hole in the ground, and there were so many holes in the ground and so many liars out there, but I just loved it. I loved it. And I swear some of these guys would sell their mothers if they could make a buck at it. But that's how we grow up. Do you know what I mean? You don't grow up buying mutual funds. You really don't. And so to be an entrepreneur, you got to go to either Vancouver or Toronto for resources, which is gold, silver, oil, and things like that. So that's where I kind of grew up. And so we have David today, and he is in Gold Royalty Corporation and chairman and CEO of Marshall Precious Metals Fund. And he's the chair of the board of Great Panther Mining Unlimited. And he come from a friend of mine recommended by Marin Katusa. And he and I always laugh about it. He and I we all grew up in Vancouver. And I do mean grow up. I mean, you guys with your 401ks, grow up. Just grow up. You guys, I don't know, you're missing out on all the fun. So anyway, David, welcome to the program. We're going to be talking about gold and what's happening.
Nice to see you, Robert. Thanks for having me on.
Thank you. You made I was watching with Danielle, one of my favorite people on Stansberry. You were talking about a 40% decline in reserves in the gold industry. What does that mean?
Well, that means the gold in the ground that's been delineated by exploration drilling. And the industry has done an exceptional job over the last half a dozen years of harvesting returns from their existing mining assets. What they haven't done is reinvest back in exploration and development, because at the end of the day, a mining company is a collection of finite life assets. Every day that we mine an ounce of gold, we die a little bit unless we're reinvesting back into exploration. And that hasn't happened because there was quite a party 10 years ago. Post the credit crisis, gold rode to over $1,900 an ounce. Copper was reaching new highs at the time, and the industry was investing in significant new mine capacity, but they strapped on a lot of debt doing that, and the input costs escalated dramatically because of the rush to invest in new capacity. There was finite resources available to do that, and so we saw inflation in labor costs and input costs generally, and that undermined the leverage proposition that investors were looking for in gold stocks, and investors stayed away. And so the mining industry said, well, okay, we have to deleverage. We have to harvest the returns we promised on these assets. So they went through a half a dozen years of doing that very, very well. The industry is at net zero debt now. So they've done a good job of repairing their balance sheets. But what they didn't do is replace what they're depleting. And that's why we find ourselves in this kind of existential crisis in the gold industry right now.
Right. So the thing I was laughing about with David and all this, they have these junior miners and exploratory companies, and then you have the majors, and the majors are like Barrick and those characters. But they need the juniors to go out there and dig around in the dirt. So that's exactly what I was doing. I was digging around in the dirt, and I was all over the world looking for that stuff. I was in Arequipa in Peru or something like that, and it's really an education. So all you guys with your 401ks, grow up. You haven't seen nothing yet. So anyway, what's happening to the juniors then if the majors can't get more reserves?
Well, selectively, they've actually been able to access capital markets now. That wasn't the case a couple of years ago. They went through a nuclear winter as the seniors focused on harvesting, cash flows from their existing assets. They just weren't putting money to work with the juniors. They weren't exploring in any meaningful way, and the capital markets ignored the juniors. But the juniors are actually starting to raise capital now, and they're doing that from a couple places: traditional sources, the equity capital markets, selectively, but also the established producers are effectively outsourcing their grassroots exploration to the juniors. They're putting capital to work within the juniors, taking tolled investments in them, so they actually start to put some capital to work. And the seniors are taking more of a portfolio approach towards that. They're deploying capital across 15, 20, 30 names within junior space, small amounts of capital, because the success ratio is so low in the junior space. It's almost like winning a lottery when you actually find something. And because of that high risk ratio, you're deploying that capital and spreading it around, diversifying. So the juniors are starting to spend more capital. They're starting to get more traction in the capital markets. And inevitably what will happen is the established producers will have to start to take the juniors out that are successful, and they find something meaningful, economic, large enough for the seniors to actually deploy capital towards. So I say selectively, you're going to start to see some M&A in the junior space.
So the juniors are the reason I traveled the world was I was looking for gold. And we finally found a gold mine in China, and it became a major. And then the Chinese said, thank you.
Yeah.
You don't teach that in business school. What did they say when they say thank you? We just took your gold mine.
Yeah.
And I'm going, what? And so today, China's one of the biggest net gold producers. And it's the gold mine we found in China. So anyway, I really enjoy this whole world, but I'd rather stick with real estate. Anyway, so what's happening if there's a 40% decline in reserves? How does that affect the price? And what does that mean for the average guy with their 401k or IRA, with their gold IRA stuff?
It's a commodity like anything else. It's demand supply driven. So the price action we're enjoying right now in gold and have over the last couple of years and likely to enjoy going forward is being driven by two factors. One is this declining supply. So it's a remarkable inelasticity of supply to price. Even as the gold price has been going up, the industry can't just flick a switch and add more supply. The lead times of new production are long, sometimes decades, to bring new mines up into productive capacity. But the demand side of it is also very, very constructive because we're in a lower for longer interest rate environment. We're actually experiencing nominal rates that are negative in some cases. And on a real basis, for sure, given where inflation is, we have negative real interest rates on sovereign debt. So there's no opportunity cost to owning gold today. It is the one financial instrument, monetary instrument, that doesn't yield anything. But when sovereign debt is yielding negative on real basis, gold is not as great place to park your capital, and it's very finite in quantity. So it's really driving capital flows into gold, and for that matter, into cryptocurrencies, which is being perceived as a store of value like gold, as an alternative to gold, is the undermining of fiat currencies that's going on with printing, with reckless abandon by central banks on a coordinated basis globally, debasing their currencies to inflate the economies and debase also the debt. The massive amounts of sovereign debt that's been strapped on is unprecedented. And the only way that these governments can hope to repay the debt is basically to debase the debt. And the way to debase the debt is to debase the underlying currencies. In that environment, you want to own the one currency you can't print, which is gold. It's very finite in quantity, 200,000 metric tons that's been mined since the beginning of time, which would fit into 4 Olympic-sized swimming pools. So volumetrically, it's a very small quantity. And we only produce as an industry 4,000 metric tons per year. So we're only adding 5% to global supply per annum. So it's not like something we can print like fiat currencies can.
So the whole point here is this: every time I'm on Daniela, because I'm not an expert at gold or silver or Bitcoin, I simply don't trust my government. I mean, that's what it comes down to. And, you talk about liars hanging a hole in the ground. The liars are at the Fed, the Federal Reserve Bank. I mean, these guys, there's 780 PhDs over there, and they should turn in their PhDs. I mean, they're a bunch of criminals, how much they're printing. So when I get into these pissing matches, well, is it gold, is it silver, is it Bitcoin? I said, I don't know. It says, how much do you have? I don't really care if it's gold, silver, or Bitcoin right now. I mean, how much do you have? And when I speak to guys like Peter Schiff, he's a good friend of mine, I said, Peter, I was buying Bitcoin at 7,000 and 9,000 a coin. So I'm not complaining right now. Well, and he gets all wrapped up about it. I'm going, the point here is this, ladies and gentlemen, the problem is money. Am I correct there, David?
Yeah, no, absolutely. Hard assets are finite. Paper is infinite. It's only limited as supply by how much the printing press can spit out on a daily basis. And now it's not even printing press; it's zeros and ones, it's digits. And the central banks are talking about it getting into the digital currency market. So they're going to try to make that another fiat currency. So really, there's no limit to what they can introduce in the economy in terms of monetary stimulus. And that's why we're seeing all-time highs in the equity capital markets every day, where we're seeing hard assets being driven to all-time highs, whether it's commodities, whether it's real estate. That's being driven. That's inflation by another name, but it is inflation.
So let me just say this much. I mean, my company knows this. For about the last 10 years, we don't keep money in the banks anymore. I mean, we have up to the FDIC limit of $250,000. But since we're a debt company, we borrow money for money. And it's completely opposite of what other guys say, you should live debt-free. But we live close at hand, billions in debt, because debt is tax-free. And it's opposite. So that's why I don't give financial advice, because everybody would shoot me for what I'm saying. But anyway, the thing that we've done in our company and personally and all this, we keep in our cash outside the banks. And the reason for that is there's no cash in the banks. If you understand that, and as if I'm not trying to spread rumors and all this, but David Morgan of the Silver Genius, he's saying the same thing now. Everybody's starting to say the same thing. Get your money out of the banks. If you're going to hold cash, keep it outside the bank. If you're going to have gold and silver, keep it outside the bank. You're going to have Bitcoin, keep it outside the bank. So I don't know if you can explain that. I have a hard time explaining to people is the banks don't have any cash. And if they have a bail-in, which they did in Greece or whatever it is, Iceland, there's no money there.
No, it's just digits now, digits in a ledger. The actual physical paper currencies is disappeared, and what we're getting is a proxy for paper currencies in the digits on their ledgers, on their balance sheet, increasingly. And the fact that banks are actually talking about getting into the cryptocurrency market, digitizing their own currencies, is inevitable. And so there's less and less visibility in terms of where your cash is right now. And that's why I think it's so important to have a component of your portfolio in gold, whether it's physical gold in a vault, in a safety deposit box, or whether it's a proxy for gold in terms of the gold equities or the royalty companies.
Please step back and listen for a while, you guys out there who believe in saving money and you trust the government and all this. I've been buying gold since it was $50 for a Krugerrand. I still have that Krugerrand today, but it's not in America. It's someplace outside this country. That's how much I don't trust my government. And if you guys have cash in the bank, you may, I don't know if you know what a run on the bank means, but that means people start lining up for cash. And there's no cash in the bank either. And so one of the biggest advantages I personally see is that if you have cash and gold and silver and even Bitcoin, I don't know how to trade Bitcoin. I just bought a lot of it when it was 9,000 and 9,000. I mean, I don't know what people are jerking around about. And so if you have cash and the banks are out of cash, you're going to have so many bargains that you think you died and went to heaven. But that is how pessimistic I have been ever since 1972 when I was flying behind enemy lines in Vietnam to buy gold. When I didn't even know what gold was, because most people don't know this, I had to smuggle that damn Krugerrand into America because it was illegal for Americans to own gold. So I come from a very deep cynicism against the banking and the Treasury and the Fed. And I think most gold guys are in the same vein of thought, right? Would you say, David?
Yeah, look, I mean, gold is the universal currency and has been for 4 millennia. It's recognized as a currency regardless of where you go in the world. And it can be exchanged for local currencies readily anywhere in the world, every corner of the universe. And that's really the beauty of gold is its universality and its inability to be debased. Because it's so finite in quantity. And I think that's the advantage. Whereas obviously with fiat currencies, there's infinite availability of fiat currencies.
Correct. And what David is saying here, one of the best things about hanging out in Vancouver was I got to travel the world to look for gold. And it cost me a fortune because I didn't have a paycheck and all this stuff. And I'm up in the Andes of Peru, and I'm standing there looking at little holes going along a mountainside. And I stand there next to this guy, I call him the little Inca. I said, "What is that?" He says, "That was the Inca looking for gold." Do you know what I mean? This is before there was YouTube and
Yes.
Cell phones and all that. They intuitively knew to look for gold, and they would track the veins. So then I go to Mongolia. It was a place called I forgot the name of it now, the checkerboard. There were holes all over the place where these Asian guys were digging for gold. Now, the Inca and the Asians, they didn't communicate. They were just looking for the same stuff. And that's when I talk to people about in education that your 401k, your IRA will never give you, you should hang out in Vancouver for a while. I always laugh about it because you're the guys digging those little holes. Am I correct?
It's true. I mean, there's an element of promotion here and capital raising for sure that helps stimulate exploration. But what it tells you is how hard it is to actually find gold.
Oh, God.
Because a lot of these companies fail. You're right. 19 out of 20 juniors that are out there promoting fail because it's such a difficult proposition to explore and find gold. It's called precious for a reason. It's very rare in terms of its occurrence in the Earth's crust, very difficult to find, and more importantly, very difficult to actually mine. The barriers to entry are extremely high. Geological risk, technical risk is capital intensive. The lead
government, environmentalists, I mean, they all want a piece of the action.
Yeah.
I cannot think of a worse industry to be in.
It's tough. It's a tough business, but I've been in the business for over 30 years and I've built 15 mines in my career. I've operated countless more than that. So I've been on the large cap side of the business for a long period of time and been successful in building and operating mines. But I can tell you, even with that kind of track record, how difficult a business it is and how difficult it is to enter into it and to bring productive capacity up and running.
So when we come back, we'll be speaking more about that. I just want you to understand the banks don't have any cash in it. If you can understand that one, and if there's a run on the banks, then where are they going to run to? But if you have cash, gold, silver, and even Bitcoin outside the banking system, what a strategic or tactical advantage that gives you in this marketplace. But that's how I think. And the reason I think this way is because I hang out where David lives now, Vancouver, British Columbia. When we come back, we'll be talking more about what I see as a pessimistic view of why you should be optimistic about gold, silver, Bitcoin, all this other stuff. It's simply because, as I say to Daniela all the time at Stansberry, I don't trust my government. We'll be right back. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show. We're talking about the good news and bad news about banking system. And our guest today is David Garofalo and his dog, who's sitting on his feet. And he's the dog is just as excited about what we're talking about. And I was talking to David because he lives in Vancouver, British Columbia, one of the most beautiful. It's a beautiful place to live, God, except it's wet, but it's beautiful. But anyway, it's where I grew up, where I went there looking for gold. And the reason I was looking for gold is because what happened to me in Vietnam, when I was there in Vietnam in 72, and I was buying gold for the first time from a Vietnamese woman, I didn't know what gold was. And I went, what's wrong with my education? And then now, I was talking to David, is that I've been a pessimist since 1972, hoping that what my pessimism was about would not come true, but unfortunately, it's coming true. So that's why all of you out there with the old idea of, well, I've got a job, I've got I've got money in the bank, and I have a 401k, I mean, I would wake up and smell the coffee, because the problem is not the stock market. The problem is our money market, and the money market has always been on gold and silver throughout history. And so that's why we have David Garofalo on this program. He's the chairman and CEO of Gold Royalty Corporation. And I hate to say this, but what I was afraid was going to happen is going to happen. If you understand why there's an FDIC, Federal Deposit Insurance Corporation, it's to prevent a run on the bank. There's no money in the banks, and they printed too much money. And so if you have money outside the bank, and so I'm not telling you what to do, but I'm telling you what I have done, is I have cash, I have gold, I have silver, I have Bitcoin outside the system, and being a pessimist might pay off. So any thoughts on that, David, being a pessimist right now?
Well, yeah, I mean, you've had a lot of really important themes there, and I think one of them is that there is a coordinated effort by the central banks globally to undermine their fiat currencies because of all the sovereign debt they've had to strap on. That's hugely inflationary, and so the question is, how do you preserve your wealth in that type of environment? And it's really owning hard assets that are finite in quantity, and gold chief among them, because it has been a currency for 4 millennia. And recognized as such globally in every corner of the universe. And I think that's why it's so important to have a portion of your capital tied up in there. And in terms of where gold's going, well, we just have to look back to, you mentioned the 1970s when you were in Vietnam, when we last had significant inflation. And we're in that kind of cycle again. Gold at the time in 1981 achieved $850 an ounce before Paul Volcker took over the Federal Reserve and started to tame inflation. Well, in today's dollars, that would be $3,000 an ounce. So we're a long way from there. We're still at least 50% away from there in terms of where gold is today. That's the kind of upside we see in gold relative to, the inflationary environment we find ourselves in, where our savings are steadily being eroded in a low interest rate environment because of that inflation.
Right. And it's really not inflation. It's really the inflation of money. And
Yes.
you know what I mean? It's not... like those, I listen to guys like Lacey Hunt and all these other characters out there. They're saying we're going into a depression, which is deflation. But
Yes.
what happens is they're going to encounter that. You have to watch what the Fed and the Treasury are going to do. And today they're the same. I mean, Janet Yellen is now head of the Treasury and she's head of the Fed. And the Fed is not American. It's got no reserves. And it's really a Marxist organization. I hate to say this, but if you read Marx, it said we have to have a central bank because it's called a central planning committee. That's Marxism. And that's why the Treasury and the Fed, and then it's our third central bank is the Fed. So I've been a pessimist all these years, and I hate to say that, but being a pessimist is going to pay off because I've been buying gold at $50 an ounce. Remember, silver was $50, now it's only $25. I think silver is the biggest bargain there is personally. And then there's Bitcoin now, which is all the young guys going after the same theme, right? I mean, so it's not right or wrong in all this. It's how much do you have now outside the system? And okay, well, let's repeat this once again. Why do you say there's a 40% decline in the supply? Why is that happening?
Well, because of the significant underinvestment in exploration. And as I said a little bit earlier on, we are a collection of finite life assets in the mining business. And every day that we mine an ounce of gold, we die a little bit unless we're reinvesting back in exploration to find more. And we haven't been doing that. The industry's been focused on harvesting its returns, repairing their balance sheets. And that's what, the investor community demanded of them. And so having done that, our assets depleted, our reserves are going down. And as a result, our production is declining. And so in the face of rising gold prices, we're just not responding with supply. We can't. It takes a long time to find deposits. It takes a long time to build them out. It's very capital intensive. It's super risky. And so as a result, we're not seeing mine supply go up in response to the price. We're actually seeing it go down. So that divergence is going to drive gold price to new highs, in my view.
Right. And another thing, too, is all these environmentalists. I understand gold mining is very pollution intense. And, AOC and all those characters of the greenies, they're going to stop gold production any chance they get. Okay, what this is like being the biggest wheat farmer in the world. So we are harvesting all the wheat, but we're not replanting. And that's what the gold industry is like right now.
Yeah, so there's capital impediments, there's social impediments. Quite often, these deposits are found within communities that might be water starved, and we're using water in our processing, so it creates a bit of competitive tension within those communities. So it's a very complex, almost 3D chess process to bring new deposits up and running to productive mines. It takes a lot of effort, a lot of capital, and a lot of time. And so that's why we're not going to see a surge in supply in response to a higher gold price. And if anything, that'll amplify the scarcity in supply, in my view.
As you're talking, I feel the lashes going across my back when I talk to those environmentalists. Those like talking to a brick wall. Those SOBs, they don't give a crap about the economy. They just don't want you to touch their water. I'm not here to pollute your water, and you can't talk to them. It is impossible.
Yeah, there's certainly a reflexive reaction towards mining generally, but we need mining. It's important to our economy, not only on the gold side, because it provides us capital and a preserver of capital on the gold side, but copper, for example, it's very, very difficult to get a new copper mine built in the United States, but we need copper to decarbonize our economy. All those electric vehicles use a lot of copper. In fact, 3 times the copper that a normal vehicle would use. And so if we want to bring down our emissions, we need copper. We need copper in our power infrastructure. We need copper in our vehicles. And it's virtually impossible to get a new copper mine built in the United States, in Arizona in particular. And so I would say, and that's a traditional copper mining jurisdiction. So mining is very, very difficult business in order to get a social license to operate, whether it's in gold or copper or any metal for that matter.
Right. So the point here is that the amount of gold and supplies are going down. The resistance to mining is going up. We cannot replenish. There's a 40% decline in gold in reserves right now.
Yes.
And so how would you, I always buy Eagles. I'm a very simple man. I just like Eagles because I don't have to think. I have a few shares of good mining companies, but I like to just have it in my hand or in an account outside this country legally. I just don't trust the Fed and I don't trust the Treasury. That's about what it comes down to. So how would you hold it?
Yeah, no, it's a great question. So if you believe in the investment thesis of gold and gold as an asset class, there's a few ways to play it. And absolutely, there's a lot of value to owning the physical gold. And I'd say you'd want a portion of your portfolio in that. But if you want leverage to a higher gold price and you want leverage to exploration, then I think you want to try to find a royalty vehicle because the royalty vehicles give you the best of all worlds. They gave you the leverage to a higher gold price because royalty businesses take a percentage of the top line of revenue. And if the deposit grows geologically through the exploration efforts of the operator that owns the mine, then you're getting a royalty on that growth of the geological base as well. So you get leverage to exploration success. But where you're protected from in a royalty vehicle is operating cost inflation. And make no mistake about it, we're in an inflationary environment given how much fiat currency has been printed. And given the cost pressures we're likely to see in the mining industry as they build new capacity to replace those depleting reserves. And so that environment, you don't want to be exposed to that cost inflation. That's why you want to own a royalty vehicle, in my view, to get optimum leverage to the gold price and be protected from operating cost inflation.
Okay, so FYI, Rich Dad does not make announcements or endorsements and all that. So how does Gold Royalty Corp work? I'm not endorsing it. We have E.B. Tucker on all the time. He's pumping in all this. I'd rather have the physical stuff. So anyway, how does a royalty work?
So, we've raised money in the equity capital markets. We had an IPO back in March and raised $90 million US. We put that capital to work with the explorers and developers that we think have the best prospects for success to build new mines. And then we take a royalty back in return. And so what that means is we get a percentage of the revenue, typically 1% to 3% of their gross revenue comes to us as a repayment for that capital investment. But that's like an annuity. That stays with that asset for the rest of the reserve life of the asset. And as the reserves grow through their exploration efforts, the royalty stays with that reserve growth. So we have infinite optionality to their exploration success and optionality to the growth in the gold price. But we're insulated again from the operating capital cost inflation because it's not a bottom line royalty, it's a top line royalty. And that's really why we're the best of all worlds. We're almost like owning physical gold, but with the exploration upside.
Right. What basically David is saying is like when we struck gold in China, it was a huge mine. We would have come to you at that point and said, we had to raise $27 million on the Toronto Stock Exchange. Mm-hmm. But at that point, we could have come to you and you would have said, get out of China. but we didn't listen. We just kept going. So Gold Royalty Corporation would help finance my little junior mining. And then you would take a percentage forever.
That's right. And it's not only the gold explorers. Quite often we're dealing with base metal companies that, for example, find a big copper deposit and they have a small component of the revenue that's gold. And they need capital to finance the construction of a copper mine. And we take a percentage of their gold revenue and return to helping them finance the construction of a copper mine. So our audience isn't just restricted to gold producers strictly, but also base metal producers that have byproduct precious metals.
So let me explain the reason why David is important to you guys listening to this. He's had the lashes across his back like I have. I mean, he knows who the liars are, how they're lying. Is it really a true assay? What's the country risk? It's all the things that I didn't know when I plowed into this silly thing, yet it was the best education I ever had. Because I learned more by hanging out with all these guys, listening to every pitch possible. Like I said, I think this one guy would have sold his mother if I had a few more dollars or something. But I just loved it. And then because of it, I traveled the world looking at little gold mines here and holes in the ground. I remember in the Andes, I was up at 17,000 feet and I passed out in a gold mine because I didn't have any oxygen. Do you know what I mean? But I wouldn't trade that for anything. So what David is saying is that he's already had that experience. You don't need to go through it yourself. And he'll go through I don't know, call him a junior, but the next big find. What is the big one in Nevada, the Royal?
Gold Strike, which is the biggest producer of both Barrick and Newmont within their joint venture.
Yeah. And those are the ones that make the money. That's what E.B. Tucker talks about, a lot of people talk about. So the reason I'm not endorsing David. I'm just saying the reason he's credible is because he's got the lashes across his back. He's climbed the mountains. He's been in the rivers. He's talked to the con men, the government, the environmentalists, all the people with their hands out. And you'd be surprised, like I found out what salting means. What does salting mean?
Well, it means when they put gold within their drill samples to spike the gold rates in the assay labs. There are now protocols around that. It happens extremely rarely, but it has happened, and there have been big scandals in it in the business as a result, in the exploration game in particular. And one notable one was Bre-X back in the 1990s. But they didn't follow proper protocols in their drilling, and frankly, nobody in the capital markets, supposed experts actually caught them out on that until a senior company came in to look at taking them out and realized that they were spiking the samples.
Yeah, would you explain Bre-X? Because that was one of the most famous cons ever. That was in Indonesia, wasn't it?
It was, and it was a supposed multi-10 million ounce discovery, 50, 60 million ounce discovery in the jungles of Indonesia. But what happened was that they were not following proper exploration protocols. They were crushing both sides of their drill samples. They shouldn't do that. And then literally sprinkling gold dust onto the drill samples and then sending them to the assay labs. It was a huge fraud, and only was uncovered when Freeport came in to take over the company and were conducting due diligence. Freeport being one of the biggest copper gold producers in the world and had a big presence in Indonesia with their Grasberg mine. And when they were doing the due diligence, realized that the samples were spiked. And as a result, there was a huge scandal, and the company went from a multi-billion-dollar market cap to zero overnight.
Yeah. And the story I heard was there were a couple of geologists who fell out of a helicopter.
One did, yeah. The chief geologist apparently committed suicide out of it. It was definitely a thing for Hollywood movies. In fact, Matthew McConaughey made a movie loosely based on that story not that long ago. Yeah.
So I want to thank you. I mean, it's enjoyable talking to you. I stick with my little gold coins, and my little silver coins, because I've been on your side of the story, and it's exciting, it's fun. I really, really enjoyed it. I traveled the world, but I'd rather have a little gold coin in my hand than hidden someplace outside this country. So with that, David Garofalo, Gold Royalty Corporation, please take a look at them. Once again, Rich Dad does not endorse or advise on anything. We're not an advisory company. We're a peer education company. And you need to talk to people like David Garofalo, Garofalo, and his dog, because they know what they're talking about. You've got to be 10 times smarter than the average investor, at least.
Yeah, it really helps to have some high integrity people with a lot of expertise around you. There's no substitute for that. And you're right. I mean, if you're an investor trying to play the junior game, you have zero hope. But I ran big, large cap companies, Robert, and I had a team of geologists and engineers, and we did a lot of due diligence. But I got to tell you, the exploration game, you're still getting it wrong 19 out of 20 times, even with the expertise, just because of the speculative nature of it. You're trying to find rare minerals in the ground with techniques that really haven't changed all that much in the last 100 years. The assays become a bit more efficient. The ability to do geological surveying is becoming a bit more advanced. You can fly drones instead of helicopters now, but still, it's an inexact science, and it has very high failure rate. That's just the nature of the business. Do you
have any I think Rickards is calling for $15,000 gold. Do you have any idea what your mark is?
I'd say $3,000 an ounce, and we'll see from there. And that's just, again, as I said in the interview, if you look at the all-time high in 1981, $850 an ounce in real terms, that's $3,000 an ounce in today's dollars. And
what about silver?
Sorry?
Why is silver so depressed?
Yeah, silver is a great proxy for gold. That's the way I look at it. And people that want to play the precious metal market more cheaply, because silver is, $23 an ounce or whatever, they'll play that, and it's got more torque than gold, because typically in a bull market, the gold price to silver price ratio is 40-1. Today, it's more like 70 or 80-1. So what that means is when gold starts to really run, silver will outpace it, because that ratio inevitably narrows. So, if you're thinking gold's going to 3,000, then silver going to $100 is not inconceivable.
Anyway, thank you, David.
Thank you for having me on, Robert.
Thank you. It was enjoyable, painful, but enjoyable. Thank you. And we come back with a wrap up on this show. Thank you, David. Bye-bye. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show. I want to thank David Garofalo, because he's chairman and CEO of Gold Royalty Corporation. And the reason I enjoyed talking to him is because he knows the pain and misery of this industry. And as he says, is that there's a 40% decline in reserves. And this is not like planting wheat. That's like you have a wheat field and you just keep harvesting it, and pretty soon you're going to run out. And so there's in the industry of gold and silver and in copper and uranium, all commodity markets, basically, there's a thing called the juniors, and I was in the juniors market. So Kim and I, we went through hell, but it built character for Kim and I. We learned so much sitting on these boards, and all these investors wanting to know what happened to my money, and then we had to tell them, well, I was up in the Andes at 17,000 feet, and I passed out because I had no oxygen. We couldn't afford oxygen. And then we find out how we got lied, cheated, and stealed, and then to be in Mongolia, and then the Andes. And these guys for thousands of years are looking for gold and silver. And you go, wait a minute, why is it, without cell phones and all this high-tech technology, why did humans always look for gold? And then Kim and I were in Indonesia, where this BRIEX was, and we were in Fiji. And we met this American guy. He was a guru, and he looked like a Hindu, but he was an American, and he was dripping in gold. So Kim and I go up to him and said, Guru, why do you have so much gold on? And he says, because gold are the tears of God, something like that. And he says, if you want wealth, you have to have gold. And so that was kind of the catalyst that, even though it was painful, miserable, lost a lot of time and money, Kim and I were, this is in 96, we're developing the cash flow board game. And my friend, so the guy said, I want to learn about IPOs, initial public offerings, and gold. He said, well, you got to be in Peru tonight. And the trouble was I was supposed to be in Dallas shooting the video for the cash flow board game. So Kim covered while I flew to the Andes and passed out in the mountains. But that's why speaking to David, and he understands the game, and it is a game. And that's why, like Marin Katusa and I are good friends. We talk about what it's like to grow up in Vancouver. It sure beats a 401k, because you've got to be 10 times smarter. So with that said, Sarah, what did you think?
He's a wealth of knowledge. Obviously, he's been in this industry for 30 years, so I love that perspective. The big thing I took away, and it should seem so darn obvious, but you asked him about why one should hold gold, and he said hard assets are finite, paper assets are infinite. They can just print and print and print, and so it just something clicked in my brain, and I'm like, that makes so much sense. Is if they're out there producing, printing money, trillions and trillions, and you have no control, you have no. The value will just be diminished the more they print. So I don't know why that seems like such an obvious thing, but it clicked when you asked the question and he said that. I was like, okay.
What it is inflation of the money supply. M2, they call it in technical terms. The trouble is none of it's in the bank.
Yeah.
So that's why guys like another guy, David Morgan, who's a silver guru, he says, you better have some cash outside the bank. And for years, I've had gold and silver because gold is for saving, silver is for spending. So I have safe deposit. I mean, I'm outside of, I don't have anything in the banks because they can shut those things down. But there are safes outside storage places where I have silver and gold coins that in case it all goes to hell, and I have cash out there too. Nothing's in my house. But in case it all comes to hell, Jim Rickard says it's got to be bicycle distance. So you can pedal to the safe, get your gold, silver, cash, whatever out, and then you can start investing because everybody's going to be out.
Yeah.
I mean, that's kind of as pessimistic as I can get. And the thing that's really interesting but disturbing, I've been a pessimist ever since Vietnam. And I hate to say it, I've been right. And I'm more pessimistic today. When David and these guys use the word unprecedented, it is precedented. It was called the Weimar Republic. It was called Zimbabwe. They just inflated M2, money supply. They just printed it, but it's not really printing of the money. It's basically a computer ledger.
Right. He mentioned that, it's zeros and ones now. It's just, and don't you feel like, so Rickards came out with his book, The New Case for Gold, 5 or 6 years ago, I think. Don't you feel like it's more dire now?
Yes.
That 6 years ago you were saying this, you were giving this warning, but I feel like we're inching closer and closer to those warnings becoming reality.
Correct. And that's why if you understand there's no cash in the banks. We're going to study this, the company and our group studies this. The problem is every time they print money, it never goes into the economy. It only goes to the investor class. So and I borrowed another $32 million. So I get richer. The average guy cannot borrow $32 million.
Right.
And that's what's going on in America. That's why there's no financial education in schools. And all these yo-yos with their MBAs and all this, you just got taken because they'll never teach you this in school. That's why I laugh about with Marin Katusa and all the characters I hang out with up in Vancouver. It's where we grew up. It's where we grew up. That this whole thing is rigged against the uneducated. And I hate to sound such a pessimist, but I'm becoming more of a pessimist because it's unprecedented. In the Weimar Republic, they printed so much. Zimbabwe, they printed so much. You look at the narco state of Venezuela, they're starving and they got more money. They have trillions of whatever rubles or whatever they are, Argentina, they're starving to death, but there's plenty of money. If you can get that through your head, you'll understand why the Rich Dad Company was founded in 1996, but you've got to have financial education. Don't sit there on la-la land. Well, I have a college degree and, whatever you have a college degree in, but they'll never teach you this. So anyway, thank you all for listening to the Rich Dad Radio Show. Thanks, David Garofalo. His company is called Gold Royalty Corp. One more thing, we don't endorse anything. We just educate. Thank you, Sarah.